Hey, good morning, Steve. Yeah, it's been a pretty big day here on the sidelines of this heavy oil Congress here. It's interesting, of course, to note, they rolled out the red carpet. We spoke earlier, as you saw, to the Omani oil minister. We also spoke to the Bahraini oil minister. A lot of conversations about sustainability, about really galvanizing the private sector as well as the public sector to really get involved here, and not only to just create jobs, but also, of course, to move forward with all of these new projects which will bring new technologies to the forefront. But I had to ask the question, are you worried about price stability? Let's listen in to what Bahrain's oil minister had to say.
People have now picked up the narrative of the supply risk. With the underinvestment that happened when the prices crashed, people are now realizing that it takes a while for the investments to result in higher production. And I think the evidence of that is really in inventories. Inventories today are way below the 5-year average. So the tendency of prices to go upwards are certainly there. Now, I think there is a risk on the demand side. Is demand going to continue as strong as it did? Obviously, the trade issue is going to impact demand in a negative fashion if it continues and persists. You've got the strong dollar is another factor. It's anybody's guess, but clearly from the supply side, the challenges remain. What's really needed is more investment in both exploration and further development to really bring production and inventories to where they need to be. People are probably now seeing and forecasting a short-term supply challenge. What that does to oil prices is also a factor of demand. So ultimately, it's anybody's guess, as you know.
So many of these countries are playing catch-up when it comes to technology development and really talking about sustainability and how this is going to work over the long term, essentially. Where are we today in Bahrain?
Well, the era of cheap oil, as they say, is over. In Bahrain, we have been focused on proving up resources. We've been working on the tight oil resource, which we now know is a large one. We've been talking to a lot of the companies in the U.S. who have the expertise. Shale and unconventionals is very much a U.S.-based phenomenon. What we're trying to do is attract them and really build up the right fiscal terms once we understand the geology, which we think is going to be a very good one. We're also focusing on the tight gas. The Omanis have been one of the first in the region to develop their tight gas resources. But that's the trend. There is no cheap oil or gas as there was in the past, and hence you need to go into some of the more difficult reservoirs. Heavy oil, like this conference today is about, tight oil, like in unconventionals and tighter resources, and of course the gas side of things. So you need to apply the technologies of EOR, you need to apply fracking, and that's why the costs are going to be going upwards, and hence to sustain development, prices will have to be at a level that induces investment.
So the price has to be right.
Has to be right.
Question for you in terms of what happens next with supplies. We've got a lot of questions about whether or not OPEC countries like Saudi Arabia and the UAE are going to make up for that supply gap if these Iranian sanctions go into play in November. Are you worried at all?
Well, short term, they've said they will, and I'm very confident that they can. But what was evident in the Vienna meeting was that not a lot of countries have spare capacity. Saudis have been always the most responsible when it comes to their supply-demand dynamics. But if the world doesn't pitch in, depending on one or two producers is not the right thing or the fair thing to do. But for the short term, clearly they will have the supply that needs to balance the markets. But over the long term, you will need to get investment back to where it was, at least before the price crash.
Were you surprised at all by the news we've heard in the last couple of weeks about that Aramco IPO being shelved?
Well, it wasn't really a clear message. We didn't get it officially confirmed, but let's wait and see. I mean, it might have been just speculation from the media.
Is there an impact? Never happens. Is there an impact, do you think, directly on oil markets if that IPO doesn't happen?
Necessarily. I think Aramco operates its field second to none. We have a shared field with them, and we clearly see it. Their abilities are certainly there, both technically and in terms of the way they've been developing more of their tight oil resources. But I think for global markets would have been a positive impact to have Aramco open up, although I think the information that Aramco has always been published in a lot of its technical papers. So the detailed knowledge of all of its reservoirs is all in SPE papers that are publicly available for any petroleum engineer to go and download.
So I think it's interesting to note not just that the Omani minister was saying essentially that he thinks between $70 and $80 a barrel. He doesn't think it's going to reach 90, but we were also talking a little bit about the geographical location of this country and why it's been so pivotal in the past, not just in terms of that sanctions conversation with Iran and the United States, the nuclear agreement, but the fact that he thinks that that's going to be a conversation that's ongoing and continuing. And certainly he feels that folks in Washington do have an ear to what the Omanis and others, including Bahrainis, have had to say in terms of that strategic relationship with Iran and what will happen next. And he seems a bit less concerned with the Iran sanctions, guys, as he is more concerned with the China trade war, guys. Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.